So welcome everyone. Today we are going to learn about the basics of insurance. Basics of insurance. Basics. Okay. So what is insurance? So insurance means a promise of any potential future. Insurance means a promise of any potential future losses. It facilitates financial protection against the or financial protection against by reimbursing losses during crisis is called as a insurance. So there is um, a book called Modern Law of Insurance. It is done by written by K.S.N. Murthy in his book Modern Law of Insurance. I think it is a second edition, 1991. So he has made a code like the axiomatic truth. The axiomatic truth. I'll tell you what exactly. Axiomatic truth. So his name is Modern Law of Insurance. Modern Law of Insurance. So in that he is given a concept called axiomatic truth. So that means with a word called with a Sanskrit word called yat bhavati tat nashyati. Okay. Yat bhavati tat nashyati. Okay. It means whatever is created will be destroyed. Whatever is created will be destroyed, right? It's a truth. So in other words, we can say like all that is created in the universe is subject to destruction, right? Is subject to destruction. So which means however a person decide to preserve the subject matter for an indefinite length of time and wishes to be free from the clutches of the destruction, and hence he preferred to safeguard or preserve the subject matter from the risk of destruction. So such desire to preserve from the basis for the emergence of insurance. So to preserve those things, so it is because of the man greediness. So what exactly he made, he has to preserve for a long time. So here comes the idea of insurance, right? Idea of insurance. Idea of insurance. So the object of insurance is to protect what? The owners or owner from risk and to make good the loss cost actually to the subject matter upon what? Upon certain contingencies, right? Certain contingency, or what we call as a contingency is what exactly? Some happening. It may happen, it may not happen. That is called as a contingency. So insurance is what exactly? To protect the owner from a risk and to make good the loss cost to the subject matter upon contingency. So, in other words, the main object of insurance is the coverage of risk by undertaking to identify the insured against the loss of damage. So, the subject matter of insurance is like have an example, life. Subject matter of insurance is like a life in what? Life policy. So life has a risk, right? The absence of a person may create a huge impact in a family. So he has to take a life insurance. Property insurance, right? In non life insurance. So there is a subject matter in every insurance. So what exactly insurance? What is the objective of insurance? So insurance business is the coverage of risk. Coverage of what? Risk. By undertaking to indemnify. By undertaking to indemnify. What is indemnification? I hope you have learned this word indemnify. Indemnify. Indemnify means yes. Yeah. Yeah. Have an example. My servant had made some losses at the time of his official work. Okay, so he made a damage against or damage towards a shop owner. Okay, so while I'm sending him to the shop for buying some snacks, so he made a problem over there, and he has you know broke every glasses. He threw all the flower pots inside the hotel restaurant, and he made a havoc situation and made a huge damage. So who should have to indemnify? The principal. He is my agent. The principal, that is me, has to indemnify. That means I am liable to give damages against the wrong act done by my agent. Same like if I've taken an insurance policy. Consider if anything happens to my property or my life, definitely because of that, insurance policy will give a damage against the loss. So that is called as a indemnification. So what is insurance? So insurance is an intangible contractual periodical service obtainable or purchasable for price called a premium or premia. So there are three personality operating in the insurance business, namely the insurance company or the insurers. Okay, one second. Insurance has three main elements. First one is the insurer, insurer insurers. Second is um, policy holders. Then brokers or insurance intermediary. Maybe agents are intermediary, right? Agents are intermediary. So insurance has three main elements: insurers, that means the company who is giving or company who is taking to indemnify the risk. Okay, policy holders who is taking the insurance policy or giving premium. Okay, and intermediary are agents. So let us understand the meaning of insurance. So insurance means a promise, a promise of compensation. For what? For any potential future losses. For potential future losses. So what exactly it facilitate? Financial protection against by reimbursing losses during crisis. And so several insurance provide comprehensive coverage with affordable premiums. As I said earlier, life term policy, I have to pay, or a person who is taking term policy have to pay 1,500 for 2 crores. Every month he has to pay 1,500. So that is, a comprehensive coverage, very good coverage, very lump sum coverage with affordable premiums. So what is premium? So in insurance there is a particular element called premium, that is periodical payment. And definitely in different insurers offers diverse premium, okay, options. So periodical payment is called as what? Is called as premium. Premium. So the periodical insurance premiums are calculated according to the total insurance amount. So as per your insurance amount, have an example, you are taking 10 lakhs insurance or 10 lakhs mediclaim. So your premium for every month would be calculated as per the company norm. Okay, maybe 13,000 rupees per year. All right. So what are the characteristics of insurance? What are the characteristics of insurance? Let's see. The first one is sharing risk. Sharing of risk. Yeah. If I am taking an insurance policy for my mobile phone, definitely same people are, many peoples would take the same policy for their mobile phones. That means sharing of risk. It doesn't mean that everyone would take the advantage of, take the advantage of the insurance policy. No, it is rarest of the rare case. People will get the help from, or insurance company would have to indemnify the policy holder. Otherwise, if you take one year of insurance for your mobile phone, if your mobile phone doesn't have any problem for that year, definitely it is called as a sharing of risk, and that particular money is a profit for the company. So why it is called as sharing of risk? Have an example again. you know, car insurance, vehicle insurance. It's a sharing of risk, right? Sharing of risk. How? So I'm taking insurance for my Benz car, okay, which have you know 47 lakhs of you know insurance. Consider 47 lakh. So my yearly premium is consider 1 lakh. My yearly premium is 1 lakh. If I pay 1 lakh, if anything happens in that year, I will get 47 lakhs. So how a company can cater with a 1 lakh, with 1 lakh? If I give 1 lakh, definitely if anything happens to my vehicle, definitely I will get up to 47 lakhs coverage. It means many people are taking this insurance. So we are sharing the risk. Understood? We are sharing the risk. Only one or two people have to claim, or there is a chance. So a misfortune may happen to those people and they will claim. That means I am also helping the another one. So we are interdependent. All the insurance policy holders are interdependent. So that is called as a sharing of risk. Next one is cooperative. Yes, it is cooperative. Cooperative, right? So as I said, the example, previous example is the landmark example. Okay. So because we are cooperating, right? If I am giving 1 lakh, I will get a 47 lakh, right? If anything happens, any contingency happens in that year. So same like that, other people are also contributing. So it is a cooperation. Next is insurance value will be determined by value of risk. So what are the risk factors? Insurance is not for happiness, right? It is for something, against risk. So payment for what? The risk. Your payment is at for risk or contingency or future contingency. And there is a payment method. It is called as a premium. Is another characteristics. Another one is there are large number of insured person. Okay, large number of insured persons, same like me. See, 1 2 3, many people will take up the same life insurance, car insurance, vehicle insurance, etc. And insurance is not a gambling. It is for contingency, or it is against the risk that you are predicting in future. Insurance is not a charity also. No, it is not a charity. You won't get a lump sum of money free. No, you have to pay the premium at time, then only you will get the money. It's not a charity. It is a what? It is a sharing of risk. Understood? So what is the role and importance of insurance? Role and importance of insurance. First one is safety. Definitely, insurance will give us a confidence. Have an example: an insurance without sorry, a car without insurance, definitely you have a fear. If anything happens, you everything you have to give it from your pocket, right? Have an example: if car has hit a person, definitely the the damage would be determined on the basis of his age. If you hit a very young boy, definitely it will be, the damage will be calculated as per his age. Have an example: he is only 12 years, definitely the court will take his age, what will be his future. At the age of 25, is he able to walk or go for job? As per his medical records, court will, the advocate will plea, okay, he will definitely argue for that. If he is got disabled, definitely you have to pay a lump sum of money, lump sum beyond, you know 50 lakhs, beyond 50 lakhs. So if you have insurance, third party insurance, everything will be covered by the insurance company. Okay, so that's why third party insurance is very important. So safety is there, right? Safety is there. If anything happens to another other people's car, definitely, if your car has insurance, if their car having insurance, definitely, you know they won't take everything from their pocket. Only they have to give the processing fee, that's it. Okay, next one is safety. Security is there, yeah, security is there. If anything happens to your car, have an example, theft or flood, it's a security, you will get the money, even though the police officer cannot recover the car from the theft, like thieves. Next one is coverage. Coverage of have an example, B2B, bumper to bumper, front bumper and back bumper, bumper to bumper, anything happens for your car, definitely it will cover all the damage or all the risk. And coverage means covering of all the parts. And another point of view is like a 5 lakh coverage, 5 lakh, up to 5 lakh coverage. So that is what exactly coverage. Coverage is, you know how far the insurance company will help you, or how far insurance company will uh, you know insure your property or your life. Okay, next is you will get a confidence. Confidence. Next is protection. Another one is help. Help. So these are the role of insurance. So in a nutshell, insurance is a help actually. It's a help. It's a confidence. And definitely another one is it provides, as I said earlier, it provides safety and security. Then insurance is a savings also. Have an example, some plans for kids, you'll save for their future studies, okay, higher studies. It's a saving. Pension plan is a saving. Promotes economic growth. Definitely it promote economic growth. It gives us economic growth. It is a saving, right? Saving, because our GDP will grow because of you know um, insurance company, because people are investing on that. Definitely, money is pooling, and definitely insurance company can give jobs to many, give salary to many, they will pay tax, life will be easier, and definitely it reflect in GDP. So economic growth can be. Next is medical support. So these are some of the role and importance of insurance. So there are functions of insurance. There are two functions of insurance. Primary function and secondary function. What is primary function? It's a provision of certainty of payment at the time of loss. Certainty, that means if anything happens, this amount you will get. So that is called as certainty. This much amount you will get. So there is a clear, crystal clear clauses or crystal clear amount or crystal clear um, you know policy for the insurance company, how they give uh, their you know insurance amount if any losses has happened. Okay, so certainty is there. Certainty of what? Certainty of payment at the time of loss. Okay, next is provision of protection. Protection is another primary function. Protection of life, protection of vehicle, protection of other gadgets, right? Another function is risk sharing. So these are the primary functions of what? Insurance. Certainty of payment at the time of loss. Certainty, very clear. How much amount we will get, it is very clear. That is called as certainty. And when we know that when we will get it. Okay. So that is called as a certainty. So next is secondary function. So what are the secondary function? First one is prevention of loss. So if there is a insurance for a manufacturing company, if anything happens, definitely insurance, if there is an insurance policy for a manufacturing company, if anything happens, it will be compensated by the insurance company. So we can prevent the loss of a particular business or particular thing. Okay, so prevention, loss can be prevented. Next is provision of capital. Provision of capital also. Capital means an amount, a solution amount we can secure. So have an example, if any loss comes, definitely we will get an amount. If a car has we lost a car because of the theft, we'll get an amount. After depreciation, we'll get an amount. It's a capital, right? It's a capital to buy another car. Next is improvement of efficiency. Improvement of efficiency. That means if there is insurance, definitely we'll get a confidence, right? So definitely it will reflect in the efficiency of a work as well. Next is it will ensure the welfare of the society. Yes, mediclaim, life insurance. So instead of pulling them down to a poverty, because of life insurance, a family can fulfill their dreams. So it is welfare of the society. Insurance company is and their secondary function is to be a part of a welfare of the society. So I'm stopping it here up to the function. So we learned about insurance, meaning of insurance, definition of insurance, and role of insurance, functions of insurance, characteristics of insurance in this video. Thank you.